Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a senior manager here at Schwab, and this is Getting Started with Thinkorswim. And today, we're talking about putting trade ideas into practice. We're going to be going through how to place orders for all sorts of different options trades. We'll start with the basic ones and move on to the fancier ones. Should be really good discussion. I think it's going to be an eye-opener for a lot of new users of Thinkorswim. There may also be some helpful tips for those who are more advanced users of the platform. In any case, we're going to get into that in just a moment, but let me first of all say hello to everybody who's already chatting in out there on YouTube. Great to see Mighty Mouse, Sharon, Chris, Eva, Doug, Brown Buffalo, Life in the Fast Lane, Robert, Andrew, Scott, everybody else. Thanks for joining us week after week. As I always say, we do appreciate your attendance and your contributions here. If you are here for the very first time, though, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, enjoy the presentation, but be aware that you're invited to join us in the live discussion. This is a Wednesday webcast series, and we kick this one off promptly at 2 Eastern Time. We'd love to have you here in the live audience, but also just to let our live audience members know, I have a couple of very good friends here. I'm going to let them duke it out. It looks like Kevin Horner. No? Let's see, who's joining us? I see Kevin. I also see Connie. Anyway, we're being joined by another coach to help us with any questions. Always appreciate the assistance there. Looks like it's going to be Connie. Yeah, great to have you on board, Connie. Connie and I have been working together now for basically 20 years. So Connie, it's great for you to have great to have you here to help me with any questions that I can't get to just during the natural flow of the presentation. Connie and I would also like to issue an invitation to anybody who's watching either on the live stream or watching on the archive. Make sure that you're following us on X. If you have an X account, give us a follow. It doesn't cost anything, but it's the best place to connect with your favorite presenters in between these live streams. But let's get right into this. And of course, as we go to use the Thinkorswim desktop platform to place some options orders, we first need to consider the risks of what we're discussing. Risks are real, so bear these important disclosures in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Options carry a high level of risk and are not suitable for all investors. Schwab does not recommend the use of technical analysis as sole means of investment research, and investing involves risks, including the loss of principal. All right? But typically at this point, I would set an agenda for the day's discussion. Today is pretty straightforward. We're going to go place some trades on Thinkorswim paper money. If it's your first time placing orders, generally it's a good idea to go in and practice in a no-risk environment, which the Thinkorswim paper money platform offers. We can go in there and practice new processes like placing options orders, make sure that we're good and comfortable with hitting all the right buttons in the right sequence, getting the trade structured just as we would intend before we go take those real risks in real markets. So I'm going to go right to the Thinkorswim desktop platform, and let's go right to the trade tab. We're talking about placing trade orders today. So on Thinkorswim desktop, that's done on the trade tab. If you're not familiar with this platform, it can be downloaded free of charge from within your Schwab Online account. You just go to the trade tab in your Schwab Online account, look for Thinkorswim, and click and just sort of follow the on-screen prompts. From there, it'll help you download the software. Doesn't cost anything to download the software. And this does give you access to managing your existing portfolio, and it has a whole suite of tools that are intended to be complementary to the Schwab Online website. But also, it has a paper money platform. When you're logging in down at the bottom, it'll ask you if you want your live account or paper money. So today we're on the paper money platform. You can see up in the upper left, it says simulated trading. That's awfully reassuring when we're doing something for the first time, right? Well, let's place our very first options trade, and let's say that our trader, for whatever reason, has decided, hey, maybe I want to buy a call on Walmart. So we're going to type in our symbol for Walmart. That's going to bring up quote information up here for the stock, but down below is our options chain, so we can immediately see we can enter into contracts for trading options anywhere from 2 days till expiration, all the way out in the case of Walmart to 681 days, about two years worth of potential trading there. But how about for today? Let's go to the 17th of April for our first trade. So to begin to place the trade, first thing we need to do is find the expiration that we're interested in, click on that. We can click anywhere on this bar really, but I tend to click over here by the little arrow or the caret or whatever you want to call it. And that reveals some, but not necessarily all of the available contracts. Right up here, we can choose the number of strikes that are displayed. By default, I believe, what is it? Maybe Connie can remind me. I can't remember. It's been a long time, right, Connie? I think it's 14 strikes that are shown. I've adjusted this to 40, but we can put in any custom number of strikes to be shown. It'll just start with the at the monies and spread out from there, equally in the money and out of the money. Or we could just show them all if we wanted to. We can just switch this to all. All right, but now that we are seeing all of the available 17th of April 2025 options contracts for Walmart, let's suppose that our trader sees the stock trading at 95-ish dollars, and maybe they think, I'm going to buy a call on Walmart. How might I do that? Well, we just go down the available strikes, find the strike that we were interested in, go over to the calls on the left side. Notice the puts are over here on the right side. And the way to place a buy order on Thinkorswim for a long option is to just click on the ask price. So you'll notice there's a column here titled ask. There's a column here titled bid. Bid is when we want to sell options. Ask is when we want to buy options. So I'm going to click on the ask price. And what you'll see is that immediately brings up a drawer from the bottom. And it shows us this bar. And this green bar is our order. These are all the conditions of the order. So it's a single leg, just buying something. Tells us the side whether we're buying or selling. We could make a change right here if we wanted to. Now, this is something I wanted to talk about right straight out of the gates. By default, I have set my order quantity to always be 2 contracts. All right. I actually made that change this morning just to sort of call attention to it, because it might strike regular users of Thinkorswim as weird that I clicked on placing an order and it defaulted to 2 contracts. Here's a suggestion that I would make if we're trading for the very first time, and obviously just consider this, right? Traders can do whatever they want to do, but if one has never traded options before, just remember that these are contracts to maybe buy or sell. In most cases, the vast majority of cases, a standard contract is for the potential exchange of 100 shares of stock, and on Thinkorswim, the default is actually to enter into 10 new contracts, right? That's 1,000 shares. Well, we can change those defaults up here under our general Thinkorswim system settings. Click on the little gear, go to application settings. Don't have to do this. I'm just showing that we can, just to maybe make entering future trades a little bit more streamlined. And we go to the order defaults under the application settings. And we're dealing with options, so I'm going to choose options. And notice right here, I've set my default to a default quantity of 2 contracts on orders. I'm going to change this now to just 1. I'm also going to leave my order quantity increment. If I start moving the quantity up or down, it'll just go up by 1 contract or down by 1 contract. So if I apply that now, let me just start the process over with my apologies. I know it can sound like there's a lot of steps to this. There's really not. Let's just go back to that $95 call and click, and now it brings up an order, and my default is now 1. Now, another thing that we can do if we just want to just customize it, we can just erase what's in there and change it that way, or we can hit the up arrows or down arrows, and it's going up and down by that order quantity, or by that increment quantity that I selected. In any case, let's put that back down to 1. And let's talk about these other changes that might be made. Most of the time, I think most traders are not going to be making terribly many changes across this bar, but we can designate whether this is to open a position or close a position. That's usually not necessary. This is just to confirm that we're on the right stock, the right expiration. We can change the expiration if we wanted to from here. We can change the strike price if we want to from here. We can change it from a call to a put here if we want to, but all of this by default has just been filled in, you'll see, just with that 1 click, with all of what the trader might be looking for. Buying a 17th of April, $95 call on Walmart that is set to, if we just leave the position effect to auto, it just means the system is going to assess, well, does Cameron already own this? Is he short this position? If it's If he's short, this would be automatically a closing position. If he doesn't already have a position, this is an opening position. Anyway, here we can set the price. Okay, this is tied to the order type. I want to cover just a couple of the basic order types here. There are lots that we can get into. I think when trading options, at least in my experience, the vast majority of options types, order types that are used are either a market order or a limit order. So let me switch this to a market order first, talk about the implications of that. What this is saying, if we enter the order this way, we're telling the system, go out and buy me one contract of the $95 calls on the 17th of April for Walmart at whatever the market price is. I'll just pay it. When I get to the front of the line, when my order gets to the front of the line, whatever that happens to be, I'll pay that price. Obviously, there are risks in doing that. The potential pro of doing that is it increases the likelihood of actually getting the order filled quickly. All right, now, if we switch that instead to a limit order, a limit order is where the trader prefers to designate their specific preferred entry price as a maximum. So let's say, okay, I want to buy these contracts. Maybe right now they're trading for $3.80 per share. I just want to make sure that I'm not paying more than $4. And I'm just saying that as an example. But let's say we're putting in $4 as our limit. That's the most we want to pay. Now, if the contract is available for less than that, the trade might be filled at a lower price. All we know is if we submit the limit order at 4, it will not fill at a higher price. Now, it might not fill at all. That's a risk of using a limit order. So how about for this example trade, let's say that our trader's okay with putting in a market order. Now we can go over here and set what's called the TIF, the time in force. If we leave that at the day, if we leave that at the day default, what that does is either the order fills today during today's trading, normal trading hours, or it just expires. If we change that instead to good till canceled, that order remains in effect until our conditions are met. So if we had set this as a limit order, if, let's say it doesn't fill for $4 today, but the price drops to $4 and we're able to fill tomorrow at $4, it might fill tomorrow or the next day or the next day. So good till canceled is a designation that can be added here to extend the time of effectiveness for the order, okay? But all of that, we covered a lot of territory with all of that discussion, but I want to drive home the point that there's really not as much to it as we might think. Really, to place this trade, we might have just come to the trade tab, click on the ask price. Hey, yeah, there's my order. I want to buy that one contract, $95 call. Let's say our limit price looks good. Okay, with the time in force set today, we could just confirm and send this right from here. Buying that one contract, trying to get it for $3.80. Throughout this discussion, keep your eye on this. There is a commission to be paid when trading options. All right? But I'm not going to submit that order. That's how to place an order to buy a call. Now, similarly, to buy a put, we just come over here to the put side of things. If we thought maybe the stock is going to go down for a while, or maybe we're buying this put for protection, whatever the motivation of the trader might be. Let's say we wanted to buy a $95 put. Well, again, we'd look for the ask column and click on that price, and that brings up a complete buy order for a long put. Same strike, same expiration in this example, same underlying stock, but we can enter a limit order, we can enter a market order, we can change the time in force, we click confirm and send. So once we get familiar with these processes, it becomes pretty quick. The platform is really designed for speed of execution, so that's really nice. So if that's how we place the buy orders, how do we place a sell order? Let's say that we wanted to sell a call or sell a put. Well, first of all, if I were to go over here and sell a short call to open a transaction, it's not going to be allowed in this example IRA. So I might need to route my order to a different account. So if we need to route an order to a different account, let's say we want to drop this one into our margin account. All right. So we can route orders to different accounts just by making that selection up here in that top menu. But let's say I wanted to sell, should we go for a different strike just to mix things up? What if we wanted to sell the $97.50 call? We just come over to the bid price and click on that, and that creates a sell order for one contract. The position effect is automatic. In this case, I don't own any $97.50 calls on Walmart. So this would be automatically to open a position, but that would be to sell this expiration, this strike price, call. We can set limits or market orders here, and we could change the time in force if we like. And then just click confirm and send. So that would be to initiate a new opening position. We'll talk about closing trades in just a moment. And similarly for puts, we'd just come to the bid side on the put side of the option chain and click on that. Let's say our options trader is looking to sell an out of the money put. Maybe we go to the $92.50 put, click on that bid price. And there's our order to sell one contract of a Walmart 17th of April 2025 $92.50 put. We can change our limit to a market and confirm and send that order. Now, for some traders though, there's a preference. Let's do this. I'm going to go ahead and buy a Walmart call just so you can see it being done on the screen. Click on that ask price. Let's just buy one contract. Let's set this to a market order. We'll get a reminder of that risk that we're taking in just a moment. But if I click confirm and send, buying the one contracts of the Walmart 17th of April 2025 $95 call at market price, I just want to give you that reminder again that we don't know exactly how much we're going to pay for this call ultimately. We might think we have a pretty good idea. It looks like it might cost around $377 for this call. But we'll see. There is a commission to be paid on this trade. But I want to send that off to establish a position here. Okay? There we go. I just sent that off. That's now working over here on our working orders. And we bought that one contract, $370, $3.70 per share. And when we place a trade, we get that pop-up confirmation that the trade has been filled if it did fill. Otherwise, it will stay here in our working orders. We can monitor the progress of that trade here on our working orders. All right, so now, what about our trader who prefers not just to enter a trade, but maybe they even have an exit strategy in place? So let's put ourselves in the shoes of this call buyer, our would-be call buyer. Maybe they're okay with paying $3.80, $3.90, $4 for a call, but they're hoping it goes up in value. If it goes down in value instead, maybe they just want to pull the plug on that trade. Is there some way they could automate that process so they don't have to watch and wait to see if the call drops in value and then go back into their account, place the order? Yep, here's how we might do that. I'm going to put in a buy order and then attach a sell order to it. There are a couple of ways to do this. Let me show you one way to do it. First way is just do what we've already been doing, is just click on the ask price. That brings up our buy order. But now I'm going to go down here where it says advanced order, and I'm going to change that from a single order, just the buy order, to what's called a first triggers sequential order. Now what that means, first triggers sequential, is if our first order, our buy order, is ultimately filled, it will trigger a sequential or a second order, our sell order, to go into effect and to be waiting a moment in time for when it might fill. All right, but so our first triggers sequential just now allows us to attach a second order to the first one. So now I'm going to go up here and right click on the original order, anywhere, doesn't matter where on the original order, just right click on it and create an opposite order. So with this order, this is an order to sell if the stock value is falling. All right. So it looks like right now it might cost us $375 to add a second contract to the one that we already own. But let's say that our trader wants to stop the bleeding if the value of that contract has dropped by, let's say, more than half. So from $375 down to about, let's say we wind up spending $380 to get into this contract. Well, half of that, let's first of all change our order type to a stop. Just think about it this way, stop the bleeding. It's going the wrong way. sell this position that I just took, I want out. So with this, we're going to put in the level at which the trader wants to pull the plug here. 380, let me do the math correctly, 190 is half of 380, right? So I'm going to put in a stop order at 190, but I also want to make sure that this stop order doesn't just expire. We're only an hour and a half from the close of trading today. I don't want this to just expire at the end of the day, and I think that I'm covered to the downside, and I'm actually not because the order expired. Let's make sure this one is a good till canceled order. So this now allows the value of the call to continue going higher as high as it wants to go. But if at any point it ever falls down to $1.90, that will trigger a sell order. Specifically, it triggers a market sell order. And it, with a market order, we don't know exactly how much it might fill for once triggered. It might be 190. It might actually pop up a little bit, sell for a little bit above. Maybe there's a big gap down in the stock price, and we can't even get anywhere near $1.90, but the 190 is the trigger, and we might sell at 170, 160, 150 on a big gap down, or those sorts of things can contribute to a sell order filling at a lower price than our stop level. But at this point, we can click confirm and send. So this is buying a new contract and attaching that stop at 190. Now, there are commissions to be paid on either side, and there's a reminder right down here that says, due to potentially wide markets or liquidity risks at the time of activation of the stop, specifically is what we're talking about here, this order, the stop order, may be manually substituted with a limit order upon activation and then worked until filled. So I could send that one off, but that's how a trader might set up a buy order and a sell order at the same time. And we could do a very similar thing if we did a put. If we were buying a put for 380, we could set a stop at 190, right? Now, when I show that, very common question is, so what if I already have a position and I want to add a stop to that? Here's a quick way to do that. It's not the only way to do it. You'll see me demonstrating the ways to place different types of trades on Thinkorswim. Just be aware there are other ways to do these same things on Thinkorswim. But really for today, I think it's serviceable, and in the interest of time, I'm just going to show one way to do each one. But if I go to the Monitor tab here, this is what some people prefer to do when they have a position already. So there's our Walmart call. Actually, we already had, did I want 100 shares of Walmart in here? I didn't think I did, but maybe I did. That's okay. I'm going to right-click on the call, and then I can create a closing order to sell that call. So did you see that? You go to the Monitor tab, right-click on the position that we want to create a closing order for, and then sell from there. So that takes us back to our order screen. An advantage of doing that is that it makes sure that we have the correct quantity here. It's very easy to overlook something. Let's say we had 3 contracts, and in building our order, if we did it from the option chain, which is possible, we might forget to change the quantity to match the quantity that we have. If we right-click instead on the existing position, the quantity is always correct. All right, Leon, you like this walkthrough? Very good. So from here, all that we would need to do is further customize this to, okay, this is going to be our stop. Maybe we set this to what did we pay for this when we paid $370? So half of that is going to be $185. Let's set the stop on this one at $185. Make that a good till canceled order. And I'm just going to click confirm and send. Wait, did I do this? Yeah, that's right. That's right. Okay. Anyway, let's click confirm and send. Selling this one Walmart contract, stop order at 185. The max profit and max loss here is actually going to show us as though we were doing an opening trade, but we know we're doing this as a closing transaction. We don't worry about this max profit and max loss on a closing transaction. There is a commission to be paid here if the order ultimately fills, but let's send this off. And remember, due to potentially wide markets or liquidity risk, just like we saw on the other stop order we placed, this order may be manually substituted with a limit order upon activation and worked until filled. So I'm going to send that off. And if I now go to my Monitor tab, there's my long call, and it has a sell right next to it. There's that order. Now from here, if I want to change that order, let's say the trade is doing well, and I want to move that stop up a little bit. Well, from here, we can also see it up here under our working order. We just need to right-click on the order. Right-click here. Let's cancel and replace that order. And where it was originally at $1.85, let's say we want to nudge that up to, okay, now stop out if it happens to drop back down to $2.50, moving that stop up a little bit. We just click confirm and send. This is telling us we're replacing the original order at $1.85 with a new order at $2.50. There would still be a commission to be paid if this one fills. There's no commission on the original order. It just disappears into the ether, basically. And we send that off. There we go. So that's canceled that original order. And now if we go back to our monitor tab and we look at that up under our working orders, we can see our stop is now at $2.50. So we're getting a little bit fancier here. So now we know how to buy and sell calls and puts, adding stops to brand new trades or to existing positions. Well, at times, traders have a plan, not just to manage the downside of a trade, but also the upside of a trade. So ask me the question, hey, Cameron, how would I place an order to buy an option with a plan to sell if it happens to fall down, or a plan to harvest profits if it happens to go up to a designated profit limit? How would I do that? Because I'd have to set it up to make sure that only one of those two ultimately gets filled. Here's what we want to do. Let's go back to that original plan. Let's say we're buying this call option, and we either want to sell if it falls by half its value and take our losses, or sell if it has doubled its value and harvest profits. How might that be done? Doug says yes, an OCO order. One cancels the other order. If we're going to put in two sell orders, it's an either or proposition. We want to sell either this, we want to sell either getting stopped out or sell to take our profits at our target. Here's how we might do that. And this is another way that a trader might place multiple orders at the same time. Let's right click on the ask price. Let's say that we're just about to buy the call, and at the same time we're buying the call, we're going to put in our two sell orders, known as a bracket order, to bracket in that buy order. I'm going to right click, go up to buy a custom order. In other words, we're putting in a custom buy order with an OCO bracket. Notice I could have chosen with a stop. This would have just taken us back to where we can put in the order to buy and the order to sell with a stop. But I'm going to choose that OCO bracket that Doug just proposed. And this creates a buy order and two sell orders. So our buy order is to take the initial position. How about we do this? Let me do this just so, that's okay. That's okay. I just won't submit the order. Anyway, let's buy a contract at $95 calls. Let's say we're willing to pay the market price, whatever that happens to be. No, actually, just to make the point a little bit more clear, let's say we are willing to pay $3.80. That's our limit. So I'll use a limit order in this example. If we get filled at or below that price, let's say we want to sell if the price doubles. That would be at $7.60. That would be a limit sell order. And I'm going to make that a good till canceled order. So when we use a limit order, either buying or selling, one way to think about that is we're telling the system, I want this price or better. What's a better price than buying at $3.80? If $3.80 is my limit, that means I'd also be happy to buy for $3.75 or $3.60 or $3.50. Yeah, in that case, better means at a lower price. Well, if I put in a limit at $7.60, what's better than selling at $7.60? Selling for $7.70, selling for $7.80. In this case, we're saying the limit that I'm willing to sell for, the lowest price is $7.60. Okay, that's my limit. So this would be to take profits if they ultimately occur before the 17th of April. Or what if the price falls? we can also put in a stop order on this one cancels order group. So I'm going to change this stop order to the 190, make that good till canceled. And that OCO designation simply means, hey, if the limit order gets filled, that cancels the stop. If the stop gets filled, that cancels the limit order. One cancels the other OCO. Right? So I could just click confirm and send from here. Now we're buying that one contract at a limit of 380, trying to sell for 360, but in the meantime, if we happen to dip down to 190, that would end the trade. There would certainly be commissions on this trade, and those stop orders, due to potentially wide markets or limit risks at the time of activation, the stop order may be manually substituted with limit order upon activation and worked until filled. So now we're getting a little bit fancier, aren't we? Okay, let's delete that order. And I want to talk about one different order type, and then we're going to start talking about multi-leg strategies. Well, for some traders, who can relate to this? When you're buying your very first option, it can be a nerve-wracking time, because we know when we buy an option, when we buy a call, I'll stick with the call side of things for this discussion. But if I buy this $95 call, I own the one call, or if we went with the Thinkorswim defaults, it would be for 10. Why don't I switch this to 10 just to really drive home this point? 10 contracts means that I have the right to buy 1,000 shares of Walmart at $95 per share. That's a $95,000 right anytime between now and the 17th of April. And you might think, well, that's okay. I don't really have any intention of exercising this contract. I'm just going to see how it goes. But I remember thinking about this. I know me, and I know that every once in a while I can overlook something important, like remembering to sell an option before expiration. How many of you have ever worried about this before? If I buy this call and then I get distracted for whatever reason and forget to sell this call for whatever reason before expiration, if the stock is above $95 at expiration, what happens automatically? These contracts are exercised automatically. If they're in the money at expiration, yep, we're the proud new owners of $95,000 worth of Walmart that we might not have meant to ever purchase. So, can a trader maybe attach a sell order to this to get out of this trade? Doug says assignment panic. Yeah, you can actually put in a sell order to be executed right before expiration if it makes the trader feel better. All right. So let's suppose we're about to buy these shares and we just want to attach. Let's go up here, change this to a first trigger sequential. I'm going to right click. I'm going to put in an opposite order to sell those contracts, not right now, but at expiration or just before expiration. In any case, if we go all the way over to the far right, watch this magical thing that happens here as I point at this little blank box. A little gear appears that wasn't otherwise obvious. See, it disappears when I'm not pointing at it. That allows me to add some conditions to my order. And I want to add a condition to this sell order to wait until the day before expiration and then sell this call. So I'm going to click on that. And I'm going to come right down here in this pop-up, conditions. I want to submit this order to sell. Let's see, this is the 17th of April calls. So let's go to the 16th of April. And I want to submit some order on the 16th of April. What's the order going to be? Well, that's actually this area up here. These are the conditions. This is what we want to happen as of the realization of that conditional event. So on the 16th of April, we can designate a local time right here if we want to. This is just my local time here in the mountains of Utah. But at this time, let's say I want to sell this call for its market price just immediately. Okay. Do I know what the market price is going to be at that time? No, I don't. Let me just check something here. I haven't experienced this before. I'm going to have to check something. See how my time in force is being a little bit finicky. I want to, that's okay. I'll make the change on the next screen. Anyway, yeah, this creates an order to sell just before expiration. So what I did want to be able to do, there we go, switch that time in force. I haven't seen that before. That was interesting. It's just paper money. That's fine. And sometimes it can be related to the bandwidth draw when I'm doing a webcast. It can put a pretty heavy load on my system. In any case, there we go. We can enter order conditions. Now, there are a number of other conditions that we might use, such as triggering the call to sell if the stock price falls to a certain level. Let's change this to a market order. Okay. Is that condition just didn't take? Interesting. All right, let's submit this order at, little repetition never hurt anybody. Let's go to the 16th of March or April. Now we'll save. I think it's just not liking the fact that I'm trying to put in this market order, obviously, as a good till cancel order. That's my mistake. That's exactly what it was giving me a hiccup about. Obviously, you can talk through things that are hypothetical for other traders, but if you don't actually do it commonly yourself, it's even easy for somebody who's been using a platform for a long time to overlook something that should be routine and obvious. That's what I was doing wrong. Anyway, yeah, I could confirm and send that, but I wanted to show you that order condition. But let's now talk about placing multi-legged strategies. So this is getting a little bit more advanced. A lot of people aren't going to know what we're talking about with some of these strategies. That's okay. I'm just talking about those that are more familiar with, let's say, vertical spreads, iron condors, butterflies, those multi-leg strategies. I wanted to show a couple of ways to enter orders for those types of approaches. There are a couple of different ways to do this. The first way is to use the menu up at the top. Notice our menu here, up next to option change, says spread single. What that means is it's showing us each of the individual strikes down the middle here, and we can trade those individually. Or we could choose a specific strategy here. So for example, if I choose vertical, this now pairs up strikes one with the next, and it starts to create the ability to place vertical spreads just with a click. So if we were okay with just doing let's say a vertical spread that's just one strike apart. On Walmart, the strikes are $2.50 apart. That's why you're seeing 92.5 paired with 95 and 95 paired with 97.5. But let's say we wanted to buy a long call vertical spread. Well, now to place a buy order for a vertical, we'd click on the ask price. If we wanted to do a sell order for a credit spread, we'd click on the bid price. Kevin says, can you do an OCO order on vertical spreads? Yes, we can, Kevin. Yeah, those are the other things that I demonstrated, adding order conditions, adding limit and stop orders, those sorts of things are available for spread orders as well. But yeah, to place my buy order for a long call vertical, for example, I could click on this and it creates a buy order. It's using the defaults that I selected up here. This is to buy a $92 call and sell a $95 call. It defaults to a limit order attempting to get the mid price. We can change the amount that we're willing to spend on this debit by using the slide, or by clicking the up and down arrows, or by just changing the price manually. Okay, but to address Kevin's question, can we do these more advanced orders? Let's say my objective here is to, well, let's see. If we're able to buy this for, let's say, 165, let's do this, Kevin. Let's come down here and choose, instead of first triggers sequential, let's do a first triggers OCO. If our first order fills, it's going to put an OCO order into effect with two sell orders. Let's do that. First triggers OCO. Now what I can do is come up here and right click and create an opposite order, and do it again because it allows me to put in two sell orders here. Right click and create an opposite order. Now with this, if we're entering this debit vertical, let's say we want to get out. if this doubles in value to 330, or let's do a stop order here. If it falls in half, half would be 82.5 cents. Let's round it off to 85 cents. Okay. We can make sure those are good till cancel orders. There we are. So yes, those more advanced order types are available for vertical spreads, for credits and for debits. Now, one other thing that I wanted to show, though, for those that like to use the multi-leg strategy, is I was only able to show one multi-leg strategy, a vertical spread. There are so many other variations on these things. We can do an iron condor, we can do a butterfly, we can do trades that involve 2 legs or 3 legs or 4 legs, or we can get really fancy and do even more than that. Here's a quick tip for placing multi-leg options orders on Thinkorswim. And that is, whether you're using a Mac or a PC, hold down the control key on your keyboard. So let's suppose that I wanted to do, should we do an iron condor? Might as well. Might as well. Even for our audience, not everybody's going to know what this is. But let's say we wanted to sell an iron condor. We're doing the 100-105, and maybe we're doing the 90-85. So I'm going to hold down the control key on my keyboard and start clicking. Let's say I wanted to sell the $100 call, so I click on that. And that puts in my sell order for that call. I'm just going to minimize that, come back to my 105 and click on the ask price. And see what that just did? I had my sell order for my 100. It added the 105. Now, let's go back over here and click on the bid price for the 90 puts. And now we have 3 legs. And while still holding down my control key on my keyboard, I'm going to click on the ask price for the 85. And 1 leg at a time, we just sort of built this order. And notice now, this knows we're dealing with an iron condor here. There's a 100, 105, 90, 85 iron condor. We can set the credit limit if we want. We can enter it as a market order if we want. Set the time in force for this entry order. Probably more commonly entered as a day order, but it's up to the trader. But yeah, holding down the control key allows the trader to get as fancy as they want. Just click on the things you want to sell, click on the bid price, click on the ask price for the trades, for the orders we want to enter to buy. Guys, we've covered a lot of territory. Obviously, not every step here is going to be for every trader out there. And obviously, we didn't even cover all of the order entry capabilities within Thinkorswim, but I think this is a very good initial guide that'll get a lot of people a long way to really understanding how to enter the basic orders, and even some of the more advanced, some of the more complicated orders on Thinkorswim. So hope you enjoyed that discussion. This is what we do on Wednesdays. We talk about getting started with Thinkorswim. So everybody, thanks for giving me your time today. I'm going to let you go enjoy the rest of our educational offerings, the upcoming webcasts. But as you go, a few suggestions. First of all, of course, if you're not yet subscribed to our channel, make sure you do that. Go down and click on the subscribe button just down below the video. That'll subscribe you to the channel. That doesn't cost anything. It literally only takes a second. But our YouTube channel is where we host our playlists of our previous webcasts. You can also join the live streams here, but make sure you're subscribed to Trader Talk's Schwab Coaching webcasts. Also, if you have an account on X, make sure that you're following Connie and me, Kevin and me on X. You can find Kevin there at Kevin Horner CS. You can find Connie there at Connie Hill CS. You can find me on X at Cameron May CS. That's yeah, you can connect with us. You can also get sort of our insights on sort of more real-time developments in the markets when we don't have a webcast going. And I also want to thank everybody that's already clicked the like button out there on YouTube. I see 106 of you watching. There are 46 that have already clicked the like button. To me, I appreciate that. That seems like a pretty good ratio. Hopefully that means I did a good job for you today. Anytime you watch one of our webcasts, if you enjoy the webcast, click that like button. It only takes a second. It doesn't cost anything. It registers as applause to your presenter. It also gives their webcast a boost in the YouTube algorithm, helps more people learn this stuff. So, Jim, you're welcome. Harry says, please direct me to the webcast dealing with the monitor tab and monitoring positions. Harry, I have the time. Let me just do that just very quickly. You'd go to playlists right here, scroll straight to the bottom. My webcast series is at the bottom, getting started with Thinkorswim, view full playlist, and what you'll want to look for are the lessons. So I have some that are labeled down below as lessons, and it's one of the 8 starter lessons. Where'd they go? They're down below there. There they are. These just go through the different tabs on Thinkorswim. Everybody, thanks for giving me your time. I'll see you in a future webcast. I'll also look for you on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.